Welcome back. All right, as we track what's happening south of the border, Mike Eppel's seeing what that means for the markets this morning. Mike, how are you? Did you watch?
No.
Not at all.
I went to bed at 9.
Okay. So you got
We talked about it yesterday. It was going to be too close to call. I figured, you know what? It was just total speculation on my part, but I said, well, we'll see how it goes in the morning.
Get in those Z's so you are well rested.
Yeah, well, that's still to be determined, right? Our hours are such that they are. Nevertheless, you know what? The markets are doing the exact same thing. They're waiting. They're just saying it's too close to call. We don't know which way it's going to go. So remarkably, we've actually seen a lack of volatility, which to my mind is surprising. Certainly, you might see a little bit more nuance or worry or fret. It does not appear that way. Because what it looks like is happening here, Melanie, is the fact that regardless who wins the White House, you still have what appears to be a Republican-controlled Senate. You're going to have not political gridlock, but you're not going to see as much movement on various party platforms on either side. So from a business standpoint, you look at what's moving this morning. Tech heavyweights, Apple, Microsoft, Tesla, Netflix, they're all significantly higher. And the theory is these companies are making so much money, the risk was that they would see a different tax code. Let's say if Joe Biden wins the White House and also the Democrats take the Senate, then that shifts their balance sheet and outlook. So that's what we're looking at from a business standpoint today. Doesn't do much for trade, doesn't do a lot of things. And what's going to happen, like I said yesterday, if Trump wins, if Biden wins, there's still going to be a stimulus deal worth trillions of dollars. And don't count out the U.S. Central Bank, which has been cutting interest rates or keeping interest rates artificially low, pumping money into the system. And all of these things are maybe more of a factor, at least in the short term, for financial trades.
Oh, dear. Okay, so we'll continue to watch here in the coming days, weeks to come. Let's talk about Uber and Lyft. What do you have?
There was a proposition on the ballot in California whether or not to have Uber employees or workers, either employees who would get full benefits from Uber, or would they remain as contractors? Now, this was a massive effort by Uber and Lyft from a lobbying standpoint to keep workers as contractors because it cuts their costs from, again, a company standpoint. So right now we've got Uber and Lyft up 14 and 15% respectively on their share prices this morning.
Mike, real estate, we were teasing this to break, and obviously we're watching this sector very closely. Toronto real estate releasing some new numbers here.
Yeah, the October numbers record-breaking for pricing. Average price north of $960,000 through the GTA. Detached homes in the downtown, $1.2 million. That's a record. We're watching sales up overall more than 23% year over year, October to October. The one outlier here, Melanie, we've talked about this before, is the condo market. Prices are up in the 416 for condos, barely year over year, and sales dropped 8%. Every other category was up. And it appears, and the commentary from the Toronto Regional Real Estate Board this morning is that people are looking for larger properties outside the downtown core.
Yeah, that makes sense. It makes sense, that trend. All right, Mike.
Well, we've seen that in pretty much every metro center almost worldwide now.
Absolutely. We should also mention your daughter was supposed to join you for Take Your Kid to Work Day.
Maybe tomorrow.
She might be sleeping.
Every day
tomorrow
is Take Your Kid to Work Day because we're working from home.
There you go. Maybe your cat and your dogs can keep you company. They're all around there somewhere.
No, they're sleeping.
Okay, everyone's sleeping. Just you. All right, Mike, have a good one. We'll talk to you again tomorrow.
Thank you.
Take care.